Our next guest at the India Today Conclave in Mumbai is an institution builder par excellence, India's most renowned banker. Corporates latch on to every word of his, and he's the man the government turns to when there is a sign of stress in the financial system. He's recently dropped a bombshell saying he wants to step away ahead of time from his executive functions, and he hasn't spoken much in the public since. So we're absolutely delighted to be joined at the India Today Mumbai Conclave by the founder and director of Kotak Mahindra Bank, Uday Kotak. Thank you so much, sir, for joining us here. Thank you.
Thank you, Rahul, and delighted to be here at the India Today Conclave. I think one of the most prestigious and outstanding events which India Today manages to do year after year.
We are delighted to have you here, sir. Shorn of all political and economic rhetoric, bankers are often the best people to get a strong financial sense of the state of the Indian economy. We're seeing some macro green shoots in terms of India being amongst the fastest growing global economies. Private investment, though, is refusing to kick off. We were here a couple of years ago on the back of corporate taxes coming down, and you'd expressed hope that this would create a virtuous investment cycle. We're still waiting for that cycle to kickstart. And we're seeing household savings, which had been one of the big strength areas of the Indian economy, now declining, as is the case in many countries. So could you start by giving us a temperature reading of your understanding of the current growth prospects and the state of the Indian economy?
I think in the last 3 years, in the post-COVID period, India has come out remarkably better than what I would have thought about at the beginning of COVID, which is March 20. And if you look at 3 years later, we look like in a much better place than what we would have thought. Therefore, India has battered and navigated through the COVID period extremely well. Simultaneously, if you look at the Russia-Ukraine situation, India has once again positioned itself so beautifully from a geopolitical point of view, and actually Indian economics getting lower energy for India, at the same time standing up in the world to say India will think for its own interests versus anything else. These two are one of the most outstanding developments from an economic point of view in a fast-changing geopolitical landscape. And kudos to all of us in this country, and particularly to all the policymakers and the government for really bringing us and navigating us through what was clearly 3 years of turbulence. And therefore, I do believe from a temperature check point of view, India is in a good place. However, the world is not in such a good place. And the reason I say it is because the US has lived off the world's money for a long time, because most of the countries around the world keep their surpluses with the US. And therefore, US gets all the money being the reserve currency. And at the same time, US deficits are very high. And you've seen from zero interest rates now in US have moved up more than 500 basis points and don't seem to be stopping. And the world's reserve currency, if it pays 5.5% on its money overnight, then the rest of the world has to adjust on the interest rate. So that is one part. Second is China. I frankly cannot figure out what is really happening inside China. And the latest Evergrande situation, which is a large real estate developer in China, has gone bust. They did not take quick action. It was a problem 2 years ago, let it fester for a long time. And the Chinese economy is not in a shape which I think it should be for getting the world out of trouble. And then, of course, you have the Russia, all the other issues. Therefore, the world, both economically and geopolitically, is not in a good place. Therefore, India is in a good place, but we are in an interdependent world.
So the banking system is more robust than it has been. According to the RBI's financial stability report for June, gross non-performing assets are continuing a downward trend at about 3.9%. That's a decadal low. Deposits growth, which had come down in 21, 22, 23, 23 is standing at 11.8%. Personal loans are growing at 22.2%. So the banks are doing well. Private investment, though, hasn't kicked off in the way that you would have liked, the government would have liked, and every Indian citizen would like. Why do you think that's the case?
You're completely right. Indian banks are in phenomenally good shape. And this is a great time to be from the point of view of Indian banking. However, a lot of the Indian banking lending, if you look at last decade or so, has moved away from corporate lending to much more retail lending. There were a lot more consumer loans, and funding consumer financing has become the core of most of banking. On the other hand, corporate lending businesses are not growing at the same time. And there could be 2 or 3 reasons. One, I wonder where are the animal instincts of all the corporates? What is it that is holding corporates from going ahead and expanding at speed and scale?
You explain the answer, that we can see.
No, I think my view is a lot of the global uncertainty is something which may be weighing on corporates' minds. The geopolitics is uncertain. India's competitiveness is something which we must look at. We have to ask the tough question that despite China going through all its trouble, why does India have a net trade deficit with China, close to $100 billion a year? Why is it that we in India cannot manufacture and find it cheaper to import from China? $100 billion a year is what India net pays to China in terms of net imports. And that is the question which we need to ask to our corporates, that for all our strong fundamentals, why is it that corporate India is not able to compete with China?